Hey guys, Joe here from JCS-Charting. Welcome to another market update. I would like to introduce this chart here. It has been gone viral on the net. It shows whenever the Fed started to cut rates. That here was a result after the SP 500. Latest occurrence was in 2020, minus 35%, minus 58%, and minus 51% during the dot-com bubble. And that was here the financial crisis. Similar occurrences happened in the 1980s and 1970s. This chart here only goes until 2022. Now the Fed has recently cut rates again. Inflation will be a topic very soon again, in my opinion. I'm gonna explain this one here, and I wrote a brief report on what I assume is going to happen on my website. You can sign in there at www.jcs-charting.com. You find indicator reports there on the advanced membership at my Discord, and I go much more into depth concerning these rate cuts. Let's jump into the DAX, the SP 500, the Dow Jones, and the NASDAQ. And we'll see if we have a bit more time to cover more assets during that session. And we're hopping straight into my Discord. We have a few new features here. This is, by the way, the welcome channel. This is what it looks like once you buy one of these two packages, the basic or the advanced. It gives you an introduction video, how to set up the threads in order to stay updated. For the basic, you have the DAX, the S&P, the NASDAQ, and the Dow Jones thread only with various time frames. I do analysis because on short term, on longer term, based time frames, so you have a short term, a longer term view what is most likely going to happen. If you have the advanced membership, you get here several chat rooms in German and English. Members are usually discussing here. This chat is going to be cleaned up every weekend. That's why it's empty right now. We have a new feature, the JCS target calculator. The macro calendar, it sets up basically all relevant events for the upcoming weeks. My trades, short-term trades, intermediate trades. This was your short-term setup from the DAX last week. On Friday, we had a nice short-term short setup, which hit all TPs into the session. A new feature is here, for instance, the indicator report. It covers what I introduced at the beginning, a brief explanation of that Fed pivot. Also, we discuss here smart money. Most sources are provided by wallstreetcourier.com. And once we hop into the DAX, for instance, here is what we have been posted on Friday. We saw a 1, 2, 3, 4, 5 impulse to the upside, which is most likely to finish here at 24,490. And as you can see, we had a little zoom in here, by the way, into the M15, but we are back into the H1. And then, yeah, with the opening candle, we were hitting that level 24,490 exactly on the dot. This here is that fair value gap which stayed open, and this is actually another bearish sign in my point of view at DAX. And then we started selling exactly as that projection was telling us. We have identified a red sequence quite early that got hit, and then we hit all basically min targets straight away. We took profits. And for the intermediate setup, by the way, we are still very short for the upcoming week. We have triggered, by the way, that sequence here, 24,210. And that triggered by just 2 bips here to the downside. And now we have a minimum target area of 24,103 up to 24,134. Could even drop all the way down to 24,037. And again, guys, if you want to get brief information and a brief explanation of all these charts, you need to buy one of these 2 packages, the basic or the advanced, at www.jcs-charting.com. This, for instance, here's my DAX channel, the daily thread. Here you get a brief explanation of the VDAX. So it's always good advice to check on volatility as well. You get a chart on that with a brief explanation. And now we have a quick look at the H4 time frame. It's a JFD indication of the DAX. It's very similar to the Cetra indication this time. In my understanding, we have seen a large ABC at DAX to the upside. Each of these legs can be subdivided into 1, 2, 3, 4, 5, and then we saw leg B and another 1, 2, 3. Yeah, it depends now how, if this is here now a complicated 4, we have seen the bottom of wave 4 here and an expanding triangle, and then we have seen wave 5 to finish wave C. The main target was 24,419. At the Cetra, I think it was 24,490, and we have hit that level on the dot on Friday. 24,498 is here a very important 100% trigger at DAX, and usually these main triggers they reverse in the first place. And if you continue on selling on Friday, it doesn't mean we have to turn bearish completely, because once we zoom out here, this could be a buildup of a large inverse shoulder, and here's the right shoulder probably in the buildup. Important levels for next week. First, we have the 23.6 retracement at 24,113. This is measured from the bottom to that top. So that is the smallest consolidation level of that move here. I would prefer at least to go into that blue zone at the 23,879. That is a 38.2 retracement. This is also where that high here sits of the 28th of November. Here was a large accumulation phase at DAX before we were actually running higher. Below there we see the 50% retracement. The last support I have here on that chart is the 61.8 retracement at 23,503. This here must hold in case DAX drops all the way down here. If these lows break, we're gonna see new lows in my opinion. So the green zone has to hold, and yeah, this here's first support, the blue zone. If that holds, we are allowed to turn around at DAX again. Yeah, and last but not least, the smart money flow index of the DAX. This shows here the last 6 months of that smart money action. And for instance, we have seen a very nice buying signal while DAX printed in lower lows into November, while smart money kept on printing higher lows. So we actually got a quite nice buying signal right here at these lows. We were hedging at these times, and yeah, got rid of all of our longs, by the way, on that second leg, because while you compare, let me show you that as well. That price action, smart money actually started to participate in that, but then on the second half, DAX printed in the same price action as from November, but smart money was not really participating in that. Instead, it was selling off the entire move on Friday afternoon. So, considering that DAX has gone nowhere in the last 6 months almost, and smart money is basically staying flat, this has to be considered as a distribution phase now, which tells us smart money is selling into that, and this is what happened, and this is usually not the best sign for the German index. And while we look at my Discord again, this time at the H4 thread of the SP500 channel, this is here all the way back to the 20th of November. We identified that bullish Wilbur wave wedge here, by the way, right on time. I said most likely we're going to see an overshoot because that red 100% triggered to the downside for leg C. And then something unusual happened. We turned exactly at the red 127%. And that was a low. Even we were waiting here for the 138, because that is usually the turning point of a larger move to the downside. And then we run all the way up. We broke out of that wedge. Later on, we triggered that green sequence here on the right. And we were hitting the min targets. And then I came out with that H4 chart on the cash. It gives you a descending broadening wedge. This is usually a consolidation pattern in an uptrend. We have discussed that in my last update on the daily chart, by the way. I said most likely we're going to break out and pull back. Targets here, by the way, between 7148 up to 7216. Here at that Wilbur wave again, we have hit all the minimum targets of that sequence. And we were even running higher into the end of the week. But let's have a look at that chart. We broke out, we found the high a little later than this projection anticipated, and now we are in that pullback phase. Guys, whenever we see that back test of that trend line here, and if that holds around 6,700, if that holds, this is actually a buying opportunity. That would be a 200-point consolidation here of that high to run finally higher. If that breaks, and we lose, let's say, 6,680, be careful out there. Then the S&P could turn around completely to retest these lows, or even to test 6,400. But this is what we have the hourly chart for at the S&P. And we have a look at the NASDAQ channel, at the H4 thread cash chart. Again, the brief explanation from the 27th of November. This was here my initial idea, that we end up in an ending diagonal at the NASDAQ 100. That means we are seeing a clean push, and very important is that we have to clear that red resistance zone, which is a golden pocket of that decline, which is a mix-up of the 61.8 and 76.4 retracement. That got broken quite early. Then I told my members, watch out for that potential flag channel build up. We need to break through that line in order that this projection stays valid. And now, if you, by the way, we had here that Wilbur wave, the NASDAQ touched the red 138%, and then it turned around exactly at that projection here was telling us. This projection has been in the chart. Let me show you for quite a while, and this is the result of that. Just by using these sequences, by the way, they are very accurate, and most members appreciate them a lot. And this is my recent chart now of the NASDAQ 100. We have now that flag channel. We were touching that upper part here on the dot, and now we have two very important notes here. First, if NASDAQ decides to turn around completely and is breaking through that upper line here of that channel, it becomes actually very bullish, and then you have to anticipate a larger move into 27,000. If NASDAQ stays within that channel and keeps on selling, we're most likely gonna see these levels down here at 24,500 to test that green zone, and this would be then our alternative 4 to run higher into the year end or the beginning of next year. So quite simple, breakout above that channel, it's turning to be very bullish, and if we keep failing or staying within that channel, we most likely run back towards that alternative 4 at the NASDAQ. Yeah, and one more thing I would like to show you here at the NASDAQ, how precise and accurate our sequences work. Again, our 138% likes to be turned around, and here the blue and green are usually bullish. It hit that level like 4 times. In the middle, at the beginning of the week, and then another 3rd and 4th time right here, and it produced always strong selling actions. And if especially the NASDAQ is not able to break through these levels, then it is a major resistance point. And yeah, we had a red sequence here, by the way, on Friday. Members were appreciating that a lot. It completed, and now we have a new level, 25,046. This is important for Monday or Tuesday. Either we get a huge bounce from that level, or we trigger that for further selling into next week. Bulls need 25,491 to get air to breathe. And on the daily cash chart of the NASDAQ, we talked about these fair value gaps to be close to the downside. The first one has been closed almost. The final closure would be at 25,069. Remember, the H1 has also a very important trigger at that level. At the top, we failed to close that fair value gap here at the top, which turned out on the daily chart to be a triple top, and this is not a good sign. We left 2 open gaps behind. We still have that major gap at the top here. The SP500, by the way, closed that and also made new all-time high slightly, or made a double top on the cash. And also, while checking on the moving averages, I used the EMA 5, 10, and 20 to identify short-term trends. This is EMA 5, and you see how that kept on being support until it flipped over. Then it became resistance here on that day and on Friday as well. The same on the 10 EMA. This is the orange one. Kept on being support while NASDAQ tried to flip over, and then on Thursday it got tested, spiked through, and now it became resistance as well. And the 20 got support on Thursday, and then it got lost on Friday as well. So the short-term trend turned already bearish. And the first intermediate trend, which is the daily 50-day moving average, it's a blue line here, jumped in as support on Friday, and the NASDAQ closed right at it. If this breaks here, we're going to retest the yellow 100-day moving average again, in my point of view, or we could even run all the way down as the H4 chart shows as the alternative wave 4. Hourly chart at the Dow, and this was here an advanced membership setup we used on Friday. We were just going long at the 38.2 retracement of that rally here at the Dow, while we are going long because we have a trigger here at the green 100% for higher. And this is here our first level to try along. We've secured already at break even. Basically, we had 2 positions. The one is already in profit, the other one is still on, and we use these points of the first trade to secure the second one. Important level here for the Dow, if this level doesn't hold, is 47,984. It's a 61.8 retracement and a 100% trigger at 47,984. Same level, very important support at the Dow. And let's have a look at the Dow theory again. Weekly chart here, very important chart because the transportations are usually telling us what's going to happen. The industrials kept making higher highs the entire year. The transportation failed so far. However, we broke that smaller divergence we had, which started in June. The industrials kept making higher highs, the transportations failed, and then out of a sudden they rallied up and exploded to the upside, and they are almost at these highs out of November of last year. If that divergence breaks as well, this is this big red one. The purple one has broken already, so we could actually take that here out of the chart. If the red one breaks as well, and presently it looks like it, this is actually a bullish indication for an intermediate cycle. This means once the transportations are starting to lead, all other sectors are usually following the weeks after. And again, I briefly discussed that at my Discord channel in the indicator reports, the Baltic dry index, which is measuring the average global shipping costs, which is usually a leading indicator, like copper is as well, and also the transportations. It's going vertically since the beginning of November, and the transportations at the Dow Jones is, these bars here are not small potatoes in that recent rallies. So be aware that the transportations are telling us something. And we are having a look while we talked about copper. This is not the recent chart, it's from the 5th of December. We had that symmetrical triangle here. And you see it's in the chart for quite a while here at my Discord with much higher targets. And yeah, we just hit the first target at copper, and again, copper is also a leading indicator for the global other assets. And let's go into the gold H4 thread. I want you to read that text. 4351 was a 161 expansion of the blue sequence on the right. I took profits a bit earlier at 3335. At 4355 we have a 100% target of that triangle. And that blue line here, that's 4351, is a major point or a major level we should have a look at. And this is the result of it. Again, our sequences worked right on the dot. They are more important than charting patterns here. For the instance, that triangle, yes, there's a 100% target. It's a nice add-on to have that, but these sequences we have are much more precise. And we can have a look at silver as well. I want you to check 64.589. Right on the dot. And you see the sell-off at silver as well. Silver was, by the way, 10% above the daily Bollinger Bands, which is enormous, and that has to pull back. Again, I assume this is a pullback here only at silver and also at gold. All these pullbacks should be bought, in my point of view. Last chart for today is Bitcoin. We discussed that bullish phase here in my last update that came out quite well, and since then Bitcoin is under pressure once again. We talked about that in blue here, that bullish Wolver wave, which I have my doubt that we run now all the way up here, because we are still staying above 10,713, and we need to understand that 89,217 has been triggered for lower. Next cycle low is due around Christmas. Give it 3 to 4 days plus minus around these dates. Remember, Bitcoin runs all the time. Our minimum targets are between 70,124 up to 79,182 at Bitcoin. So according to my system, to my sequences on the daily chart, Bitcoin should run a bit lower compared to that low before reverse higher. Yeah, that's it for today. I hope you enjoyed watching my analysis. I see you next week. Members will get more updates tomorrow or later this evening. And I wish you all the best. Have a nice remaining Sunday. Thanks for watching. Bye-bye.